2024 has been an eventful year. Not only in the markets, but the overall geopolitical and economic landscape had defining moments this year. From the UK and US elections to political wars in key areas of the world, the financial markets have certainly been reacting to what has been going on. However, in this video, we'll be looking ahead to what 2025 may have to offer for the financial markets. Here are our top 5 outlooks for 2025. Number 1, Nvidia. Nvidia is the global leader in GPUs and a cornerstone of AI infrastructure. It continues to dominate the semiconductor space, with revenues expected to rise 152% year-on-year to $113 billion in 2024, and gross profit margins hitting 76%. The company has solidified its position as a market favorite. Despite these strong fundamentals, the upcoming launch of the Blackwell chip, heralded for its speed and energy efficiency, carries significant risks. Production issues, including overheating and design flaws, have already posed challenges. Nevertheless, demand for Blackwell chips remains robust, and Nvidia's market dominance gives it an edge in addressing these challenges. Their revenue concentration from mega-cap clients like Microsoft and Meta, which account for 38% of its business, is a potential vulnerability. The success of Nvidia's stock in 2025 will largely hinge on sustained client investments in AI infrastructure and broader adoption of its cutting-edge technology. While volatility surrounding quarterly earnings remains a concern, Nvidia's position as a leader in AI-related growth leaves room for optimism. Number 2, the stock market. The US stock market was a standout performer in 2024, with the S&P 500 delivering 33% returns, far outpacing the FTSE 100, 15%, and the Euro Stoxx 50, 13%. Key drivers included strong US economic outlook and robust corporate earnings, significantly outperforming European counterparts. While high valuations, such as the S&P 500's price-to-earnings ratio of 27, raised concerns, these are offset by favourable economic and corporate fundamentals. Now, the cost of accessing US equities remained steep, with price-to-book ratios reflecting a richly valued market. However, analysts remain bullish, predicting that the S&P 500 could surpass 6,500 in 2025. But there are risks, including potential fiscal deficits, geopolitical trade policies, and inflationary pressures. Despite these uncertainties, the US equity market's ability to thrive amid global economic headwinds remains a significant advantage for investors. Number 3, gold. Gold experienced a stellar 2024, with prices up 28% year to date, driven by inflation concerns, geopolitical risks, and a weakening dollar. The December 2025 COMEX futures project gold prices to reach $2,775 per ounce, with some analysts forecasting potential highs of $3,000 per ounce. Key factors supporting gold's bullish outlook include political risks, continued uncertainty around elections in major economies, and potential geopolitical conflicts, including Middle Eastern tensions and US trade policies. Inflation. Despite expectations of slightly easing inflation, growth risks, coupled with persistent cost pressures, make gold an attractive hedge. Currency trends. A projected weakening of the dollar in 2025 against other major currencies, such as the euro and the yen, could drive further demand for gold. Demand dynamics, they also favour gold. While central bank purchases slowed in late 2024, global ETF investments surged. With potential geopolitical and economic volatility on the horizon, gold is likely to remain a key asset class for investors seeking safe havens. Number 4, budget deficits. The US budget deficit currently exceeds 6% of GDP. It's raised questions about long-term fiscal sustainability. The prospect of additional tax cuts from the Trump administration could exacerbate the deficit, potentially destabilizing the bond market. Historical precedents, such as the US fiscal challenges of the 1980s, suggest the potential for rising interest rates and a stronger dollar to disrupt global markets. In Europe, fiscal challenges are most acute in France, where a 6% GDP deficit has already sparked market concerns. While countries like Spain and Portugal have seen fiscal improvements, the disparity in European budgetary health could increase bond market volatility. France's status as the Eurozone's second largest economy means its fiscal health will significantly influence regional economic stability in 2025. And number 5, election risks in 2025. The global political landscape in 2025 is fraught with risks. While fewer elections are scheduled compared to 2024, the potential for unrest remains high, fueled by unmet voter expectations and ongoing geopolitical tensions. Maplecroft's Civil Unrest Index indicates that protest activity has risen across all regions, with countries like Mexico, India, and Poland facing significant political instability. Trade policy under the Trump administration adds another layer of uncertainty. Proposed tariffs could trigger retaliatory actions from major trade partners, such as China and Mexico, escalating global inflation and disrupting supply chains. Conflicts in Ukraine and the Middle East further contribute to geopolitical fragility, with the risk of broader involvement by global powers. Efforts to resolve the Russia-Ukraine conflict also carry their risks, as a forced ceasefire may lead to future hostilities. Additionally, political instability in major European economies like France and Germany poses challenges for financial markets, potentially increasing demand for safe haven assets like gold. If you would like an even deeper breakdown of what we believe you should keep an eye out for in 2025, our 2025 Market Outlook ebook will be linked in the description below. But for now, happy holidays, and we will see you in the new year. Remember to subscribe to the XTB channel to learn more about trading and investing.